Good morning. The splendid response to the Coal India IPO has boosted the morale of the bulls, as did a few strong corporate earnings. The momentum may continue today as well, at least in early trades. TCS is likely to do well on the back of stellar Q2 results. The feel-good factor may also spread to other counters as well, especially if India Inc. continues to meet and beat estimates. But shares of Wipro might slip after the company announced lower than expected bottom line and top line for Q2 of financial year 2011. Wipro has reported consolidated net profit of Rs 12.85 billion versus Rs 13.18 billion in the previous quarter. Revenues are at Rs 77.30 billion versus 72.36 billion in the first quarter. The euphoria surrounding the Coal India issue could linger on. The stock is slated to list on the 4th of November, and this will not only coincide with the Diwali festivities but also with a spate of other big events. The key ones would be the policy meetings of the RBI and the Fed, US congressional elections, and the Indian visit of President Barack Obama. The G20 Leaders Summit is scheduled for the 11th and the 12th of November. Before that, we have to contend with the deluge of earnings, local and global, world economic statistics, and of course the F&O expiry. The big question now is whether to stay invested or lighten, and according to us, we think we should stretch for a little longer period of time. Talking of the futures and options, the Nifty futures premium increased and the open interest went down on Thursday, pointing to some short covering. Going by the build-up in puts and calls, the intermediate resistance and support zones for the NSE Nifty are placed at 6,200 to 6,300 and 5,900 to 6,000. Near-month expiry is likely to take place at around 6,100. We expect the bounce back to stretch a bit more. The Nifty needs to cement its position above 6,050 levels for few more trading sessions in order to post sustainable recovery. Till then, we expect to trade in a range of 6,000 to 6,135. The Nifty is likely to meet resistance at 6,150 and thereafter between 6,200 and 6,300. FI inflows seems to have tapered off a little lately and one needs to watch it carefully. Overall, the market undertone is quite positive, notwithstanding 2 weeks of minor losses, but one needs to be cautious as things might turn a bit volatile. The FIs were net sellers of Rs 8.5 billion in the cash segment on Thursday provisionally, according to the NSE website. The local funds were net sellers of Rs 2.3 billion. In the F&O segment, the foreign funds were net buyers of Rs 16.98 billion. The foreign funds were net buyers at Rs 8.1 billion in the cash segment on Wednesday, and the mutual funds were net buyers at Rs 500 million on the same day. The results to be declared today are Aptech, Bank of India, Bank of Maharashtra, Binani Cement, Binani Industries, Biocon, Chennai Petro, DB Corp, Divan Housing, Emco, Finolex Industries, Geometric, Indian Bank, Ipca Labs, JSL Stainless, KL Consultants, Kirloskar Oil, M&M Financial, NIIT, Piramal Healthcare, Reddington, SKS Microfinance, Shobha Developers, TN Newsprint, Tata Elxsi, Thomas Cook, Vijaya Bank and Wipro. Reports suggest that IOC's proposed FPO will be bigger than the Coal India IPO, worth around Rs 190 billion. A lot of public sector issues are lined up over the next few months apart from the private issues. With these, the government looks all set to meet its disinvestment target for financial year 2011. The fiscal deficit picture too would look a lot better thanks to the bumper harvest reaped from the 3G and BWA auctions. India is pretty hot and happening right now, so the deluge of FII money will persist even as the world economy limps along. The Asian markets are mixed this morning with China under pressure. US stocks posted moderate gains spurred by a few encouraging results and economic data. But Wall Street finished off day's peak. European stock benchmarks also ended higher, helped by upbeat results from a few key companies. Group of 20 finance and central bank chiefs meet on Friday and Saturday in South Korea, seeking agreement on a common path to manage currency, trade and macroeconomic imbalances ahead of a leadership meeting in Seoul next month. Investors poured another $5.8 million into EPFR Global tracked emerging market funds during the third week of October, according to EPFR Global. Global emerging markets equity funds posting record inflows for the second time in the past 3 weeks. The overall EPFR Global tracked equity funds absorbed a net $4.74 billion for the week ending 20th of October, while their bond counterparts took in $4.69 billion. Money market funds meanwhile posted their biggest outflow since the second week of September. US Treasury Secretary says that China will continue letting its currency appreciate against the dollar but calls yuan significantly undervalued. The G20 summit scheduled for this week in South Korea could be a stormy affair. Whether the top leaders are able to resolve differences over currency matters remains to be seen. Moving on to the recommendations, the technical calls are: a buy on Andhra Bank. We recommend traders with high risk appetite to buy the stock above levels of Rs 173 for a target price of Rs 183. A stop loss of Rs 168 should be maintained on all long positions. And a buy on Aurobindo Pharma. We advise buying the stock above levels of Rs 1,185 with a stop loss to be maintained at Rs 1,160 for a target price of Rs 1,235. And the derivative strategies are: long Syndicate Bank October future in the range of Rs 136 to 137 for a target price of Rs 144 and a stop loss is replaced at Rs 132. And long IT October future in the range of Rs 72 to Rs 73 for a target price of Rs 78. That's it for the day. Thank you and have a great day ahead.